Let's get to some healthcare names that are moving this morning. Chief amongst them, of course, United Health Group. Bertha Coombs has some key takeaways for us from all that. Bertha.
Hey, good morning, David. United Health's third quarter results beat on the top and bottom line, but high medical cost trends are weighing on the stock. On the call, CFO John Rex said that they're continuing to see aggressive upcoding by hospitals. That means making patients seem more acute in order to charge higher rates, but also an unexpected increase starting this summer and continuing now of expensive brand names being prescribed, which they attribute to the out-of-pocket caps from the Inflation Reduction Act for Medicare patients, which they didn't think would be as big a factor until next year when that cap goes down to $2,000. As a result, United is lowering the high end of guidance for this year amid higher costs for the Change cyber attack earlier this year. That's one of the reasons as well. And now anticipating full year 2025 earnings below the street's estimate. And as United goes, well, so go its rivals this morning, likely experiencing many of the same issues. Johnson & Johnson, meantime, beating on the top and bottom lines, driven by beats across the portfolio in oncology and immunology drugs. Economic weakness in Asia, though, weighing on J&J's medtech business, and ongoing talc litigation continues to pose a headwind. Meantime, take a look at Walgreens, seeing its best gains in 4 years as earnings beat on the top and bottom line. But among the highlights, the healthcare unit, which includes VillageMD, where they've made a lot of cuts, posted positive operating income, offsetting continued headwinds in pharmacy. And to that end, the company is going to close 1,200 stores over the next 3 years, shrinking the footprint by 14%, which CEO Tim Wentworth says will be immediately accretive. Back over to you, David.
Thanks, Bertha. That VillageMD deal for Walgreens, just terrible waste of shareholder money. $5.2 billion. I think they took a $5.8 billion hit and a $12.4 billion impairment. Want to come back to United Health, though. On the conference call, Brian Thompson, the CEO, talked about upcoding to inpatient stays versus what they feel is more appropriately billed as outpatient. What is he talking about there, and what does that mean?
Well, you know, we've been hearing for a while that inpatient stays in hospital is one of the things that's been driving up the medical cost. So there are different rules that have shifted where patients can stay longer. It's called a 24-hour rule. And also, they claim that hospitals are upcoding, meaning, you know, if you have diabetes, they might add a cardiovascular, they might add something more acute, which allows them to charge more. So that's what they are saying is happening with the hospitals. Of course, if you talk to the hospitals, they're saying that, you know, the insurers are putting too much pressure on them, not paying them for as much of their care. So that continues to be a friction point here. Carl?
Bertha, thank you very much. Bertha Coombs watching some of the healthcare stock.